The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Welcome, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, you get the Dow down 102, Nasdaq's off 20, S&Ps are off 10, gold's up 16, you get silver up 11, bonds are up 11, King Dollar's down 403 ticks. And, folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN.com. See the banner right on the right-hand side. You can test drive it right here, right now. They put $25,000 of funny money. You can open an account for as little as $100. And Darrell and you are going to see this today because this is a perfect day for Nadex, baby. Darrell, what's happening, man?
So it has been a crazy week, hasn't it?
Oh.
Everything that's going on with, like, the Fed and all that stuff. And, I mean, we're getting these, like, massive gaps overnight. We're, 13 points down?
And
I mean, there's massive moves happening.
And there's no doubt, folks, and it makes it beautiful. And when I said that this is a perfect day for Nadex, so check this out, okay? So if we go over right to the S&P futures first, what you're going to see is this, folks, okay? This is pretty wild. And this started, the first leg down. Let's see, was it 0630? Yeah, it was at 0630. 0550, actually. The second one where it was testing it was 0630. Now, check it out, folks, okay? So it's pushing to the bottom. It's pushing that 1684. Bottom line, had a hard time cracking it. So then it cracks it. And as it cracks it, it finally got some juice. But guess what? This baby's not going to hang down here, folks, okay? Now, what you have going for you, which is really a trip, is we get a Friday, but we get the volatility in the market, and we get crazy Congress, okay, in Washington, D.C., and whether they do something or don't do something, you're going to end up with a couple press releases out here, probably, I'd say, 4 or 5. There'll be at least a couple press releases within another 3 or 4 hours, folks. And they won't mean anything factually, but guess what? They're going to mean something for the market. You're going to get spikes in the market, okay? And that's all you need is a spike in the market on this product to make money. It's like, ought to not lose money, which is a trip, man. There's no two ways about it.
Yeah, or flat while you're waiting. But, yeah, you just got to be careful on that on a day like today.
Yeah, and play the other side of it. No doubt about that. We take a look at the gold market. Gold's up 16, and guess what? See, when I'm looking at this market right now, folks, okay, this is how it sets up. And gold is giving me the biggest clue, really. So gold's up 16, but guess what? The last time that we had any juice on gold was 1345. That spike, let's see, 13, it was at 750. Yeah, it was 1345. Then it basically comes into that area once again, and that's where the second test come, which was at 820 when it opened, and that's when it actually should have had higher volume, and guess what? It didn't. It was 3,400 contracts versus the 7,400, and bottom line, Friday, don't be too surprised if gold gives it all back. Okay, so let's talk about setting up a trade here, all right?
All right.
Now, where I'd like to go, Darrell, is this. I want to go into the S&Ps, all right? And believe it or not, I'm going to go long.
Are you going for a gap fill on this thing?
I'm going for that. What we've done on a consistent basis the last 4 days, right? All we're doing is that we're going into the area of May 22nd, and May 22nd, let me tell you something, is going to be hard to break down. 1687 is the high of May 22nd. The correlation there is pretty intense. If you take a look at the correlation, folks, in the SPY, the SPY, yesterday you came into that same area, and that area, to be exact, so you can follow it, and the SPY is 168.07. Yesterday we hit the 168.05, we rejected it. You rejected it yesterday with 77 million shares. versus 240 million. So the futures are doing the same thing. So I want to go long the futures, man. So
All right.
take that analyzer, baby, and give me. I want a couple trades actually.
Let's do it. What do you got?
I'll take. When I'm looking at the platform right now, I'll take the 12 o'clock trade first, as long as that baby risk reward. There's a 11. No, there's a 1680, 1690, man, which I think is not bad.
Yeah, you can get a $30 risk on a 1680, 1690, 12 p.m. right now.
Yeah, so I'm going to take that. So that's one. So what I'm doing there, folks...
Has to move about 2 points to be break even.
Right. So, okay, so that's cool. So right now, let me just walk you through this, folks, so you can see what I'm giving up here. So we are at exactly 1682, and that's not bad. I got to hit this quick. So I gave up a point and 2 ticks, because I got it at 1683.3. Now the way this works, folks, okay, and that's what I did. I was risking 300 for 700. That's what I did. So we'll see where that baby goes. That's the first one. Now the second one is going to get more interesting. I want to go over that gold market. So now find me a gold. Well, first off, you can explain. Let's explain what the analyzer does first, so we can. I know because I'm using it, okay, but so they can get to understand it.
All right, what the analyzer does, it pulls all the data in from the Nadex exchange live. And then it does all the math so you don't have to, so you can look at your chart and put your focus where it matters.
Right.
Instead of staring at a option chain. And so I can go over here and I can go, you said, I'll take the 12 p.m. So we go in here, we look at S&P 500. That's why I chose that. I said I want the buys. I want ones with a decent risk-reward ratio.
Yeah.
And instantly it shows me, okay, here are the ones that are buys with a decent risk-reward ratio on the S&P.
Right.
And I'm able to look at that, and I can see how much time there is till expiration.
Yeah.
We got the 12 p.m.s.
Right.
Obviously, I can see direction and all that. But I also can see break-even distance. How far in Nadex ticks, because Nadex ticks in 0.1 on the S&P.
Yes.
In Nadex ticks, does it have to move to be break-even? How far does the underlying market at expiration have to move? That's when you're really going to start making your money, is after it moves that far. So in this case, it's like 12 ticks. It's going to have to move like 1.2.
Right.
So already moving in our direction. And then it can also tell me the max risk and max reward. If I don't have that up, okay, here's what I have to do. I got to go, okay, Nadex, okay.
Well, here, let's
indices.
do this. Can you do... I know, go ahead. I'm sorry. Yeah, go ahead.
I got to go. I got to click indices bull spreads. Then I got to click US 500.
Okay.
Then I have, 4 different possibilities. So even if I know 12 o'clock is good, okay, I got to click 12 o'clock, and then I got to either look at it and calculate the math in my head, minusing the offer from the floor, or I got to open it and I got to fill in the quantity to find out what it is.
Exactly.
Okay, so what I can do without having to do that is I can just go over here. Plus, maybe there's an 415 that has the same risk. We've seen that on the air a lot.
No,
where you'll see one with like
actually,
3 more hours
that
of
up,
the same risk.
I saw another one that I might hit too. That's what we'll go back to that in a second. But there's a later one with those that's 7 ticks. Okay, so that's 415.
Right, now that one you're going to have a higher risk reward. So you're probably going to be using more of a stop type strategy.
Yeah. Okay.
So it all depends upon whether or not you want to use a stop or not, or you can hedge it off, which is one of my favorite strategies.
Yeah.
So, and that's where I'll sell one to hedge it.
Right.
So I'll go long one that's like really close, like the one you just found.
Yes. Right.
And I'll go short another, so I get a lot of profit potential. And think about it. Like, how long do you think you don't expect to take that long to move? So you could actually hedge it off with like a shorter term one.
No, I don't. Exactly. What I'm looking for. So watch what happens here, folks. Now you're getting 2 different things off me right now. I'm definitely doing price and volume. That's all I'm really basing it on. But what I love is that we have volatility. And what has happened personality-wise in the market the last 2 days is that all it takes is any congresswoman or man say anything, and the market will spike 7 points either way. So it's like, okay, now we've already spiked down, and the spike down, folks, okay, doesn't have the juice. So that's telling me that, guess what? When this comes in, the spike will go up. Now, it doesn't mean it's going to hold. It just means that, hey, spike is up. What we are going to have, though, again, here today, is no volume. The volume is meek beyond belief. Right now we're running at 120 million. It's not even close. So it's the identification is that you have the lower volume. We have the test. I've had the test on lighter volume. I have the gold contract testing its highs, and that failed. Okay. Now I coordinate that with the dollar, go over to the dollar index, and the dollar index is coming into the lows that were established on the 18th, and that's coming in with dramatically lighter volume. So when I lay those babies up, and when you talk about dramatically lighter volume, if you want to see that correlation, it's pretty intense, folks. We've done 9,900 versus 4,800 contracts in the dollar index, and the dollar index, by the way, gets most of its play between, well, let's put it this way. By the time Darrell and I get off the air, more than 70% of the volume will be in the dollar index. And you can see it's not even close, man. So it's going to get interesting. You got to love it, man. I'm telling you.
Yep. So now the other thing we have is if you think it's going to go far enough, we have the spreads and we have the binaries.
Yeah, so, okay, here, let's look at a binary. I was going to do that because I actually put a trade on before we started, okay? But I was going to look at the binaries, and I said, oh, man, stay away from those binaries. I've been staying away from them. I know you do really well with them, but
Well, it's all based on the strategy you're doing.
Right.
So you got to have a very specific reason for doing them.
Yeah, and today's a good
versus
one.
Like the spreads are a lot more like I'm just trading. Like I'm just following the trend.
Yes.
Whereas if you have some very specific, just detailed reasons, then you can find the best one for what you're looking to do.
Right.
So, as an example, let's say like a lot of times I'll do gap fill trades. So where the market opens up at one price and it's different from where it settled at yesterday.
Yes.
So like the S&P settled yesterday, say 1692.5. Okay, we list this like right here on our diagnostic scanner.
Yes.
And so you could go down on the S&P, and I usually choose a 415. I like one all day long.
Right.
Okay.
Yeah, for sure. It gives you much longer time to have it come into fruition. Yeah.
This is one of the very few reasons I'll ever choose what's called an out-of-the-money binary, meaning it's not already in the money.
Yep.
Is a gap fill. And so if I was doing that, I'd put like 5 to 35, and I'd just say, show me everything to the end of the day.
Yeah.
Now I can get rid of it and go a little bit, get rid of all these like intradays,
right?
Like 4 hours away. And now all I'm going to see is the dailies, the 415s.
Nice.
Okay.
Yes.
And it'll actually put the weeklies on there for me too, which is a big benefit because a lot of times those strikes are really close, and so I can see dailies and weeklies together.
Yeah, that's huge, man.
Which, if I was over here inside the platform, and once you're trading, you really realize how big this is, right?
Yes.
Because otherwise, I'd have to go indices, binaries, S&P 500. I'd have to click on dailies, analyze that, and then go and see, is there a better strike on the weeklies?
Right.
So and it doesn't seem like a big deal, man, but that could, $5 could be a quick.
No, it's a huge deal.
Right. But you had $5 times 10 contracts, that's $50.
Right.
You do that 10 times, that's $500 you gave away by doing a click.
Yeah, exactly.
Not having it right in front of you.
Amazing.
And I can look at all 4 indices for gap fills simultaneously.
So what's so cool here, folks, okay, come to our website at TFNN. You can open the account. It's on the right-hand side. And once you get the account open, folks, you can go over and test drive Darrell's Analyzer. It's an outstanding piece of software. This is Darrell Martin, Tom O'Brien. You stay right there, folks. We're coming right back. The Dow is down 93.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow down 97, Nasdaq's off 11, S&Ps are off 950, and inside that future. So watch this, folks. This is going to be really cool watching this shake out here. So inside the S&P future right now, I'm going to put this on a 1-day. If you happen to be in your car, I'll explain what we're looking at. So what we're looking at is the future contract right now. We're at 1682.75, and what it's done is that it started doing this, testing the bottoms at 6:30 this morning. And bottom line is that it broke it. It took quite a while to break it. It broke it at 9:30 at the open. But once it broke it, folks, what you had is this. You did 1 million contracts on the way down. You got down to the 1681. Then you got into that low and rejected it at the 1680 flat out. We did that with 68,000 contracts versus the 100. So check that out. Okay, so now what are we doing? Well, you're into it 30 minutes right now, and you're building cause. The neat thing in building cause, by the way, to spike higher. This is what the neat thing is that to get to 1686, I'm not looking for a lot of bread here at the beginning, but 1686, you don't need a lot of juice. And the reason you don't need a lot of juice is that there's nothing going against it. There's no resistance on the other side. So this bar here is going to be really crucial. And so what I do when I'm day trading, folks, I'm always using 10-minute bars. But it's going to be interesting to see how this whole baby does shake out, because she is kind of just hanging there right now, and she's not backing off. So gold is still
just hanging out at that point.
Yeah, there's no doubt. There's no doubt. Waiting for one of these Congress people to turn around and say something.
I know, seriously. I mean, it's just like I'm watching the news all day. I just have a little like feed alert up just to see what's going to pop out. So.
Hey, listen, I mean, the easiest thing for all of us, right, is just send them all home and not pay them. No, seriously, man. That would be...
I'm all down for it, man. You got my vote.
Send them all home. Don't pay them, okay? And bottom line, you'd be really surprised, how quick we would start getting things done. Because, it's turned into a turkey shoot. I mean, they're all turkeys. It's like a joke.
Yeah.
And well, you get the gist of it. It's all about raising money. That's all they care about. And, it's raising money on a continual basis for whatever side of the aisle, whatever the deal is. It's pretty amazing, though. Yeah, we should have sent them all home 2 years ago. Yeah, we probably... the reality is that it's been getting worse for years and years and years. And what has happened, there's no doubt, is that the amount of soft money that comes in, and that's legal money, folks, they can take. It's out and out bribery. That's all it really is. But they've set it up that it's legal, And you can imagine. So what a congressman makes, I don't know, 160 grand? Guess what, folks, okay? A couple of $1 million buys them off forever. It's like some of them, they'll take less, anyways.
Yep.
But what we're going to depend on today is that that one of them's going to come out, we're going to get a nice spike in the marketplace. Which is really sick, no doubt.
It's like if they're going to mess things up, you might as well make some money off of them doing it.
Listen,
so.
You know what? I don't even worry about them. I don't. But what does happen? What was funny this morning? I can tell you this, folks. What was funny? I don't pay attention to news. I don't even have a TV. Okay. And what does happen, though, is that it's really funny because when I saw these futures this morning, I said, oh, this is going to be beautiful. There's going to be, someone's going to start yapping. And that's all we need is one little yapper on a Friday. You know what I mean? So.
Right.
Okay, so we were talking binaries, right?
Yep.
Okay.
We're going in here, and we were just looking at different ways to, play gaps or whatever else. That the market may do it. I mean, you can do them insanely cheap a lot of times. I got some on yesterday for like $5, $10, $15.
Right.
And normally, those would be the ones I'd avoid. Okay?
Yes.
Those are like, stay away. But you had the market gap and then starts moving back, towards, say, like the settlement price.
Right.
And, so the logic I give for that is you had stocks, you had the futures trading all night on news, on this, on that, on everything. Okay?
Sure.
But then the stocks haven't been trading all night. You had a little post-market and you may have a little pre-market, but overall, they haven't really been trading. And so there's a lot of orders sitting out there in the market, a lot of limit orders.
Yes.
Okay, that haven't been filled yet. And ultimately, that's what drives the market is orders. And they want to use those orders, big market mover uses that order flow to help, push the market around, get in and out of their positions and things like that.
Yes.
And the most, agreed upon price technically is the consensus settlement price of yesterday. It's what's used for mark-to-markets, what's used for option expirations, all that exercise. And so you can go in, and a lot of times you can get a trade on, especially the last couple of days, like $10, $15, looking to make like $30, $40 on a trade if it goes back and fills that gap anytime between now and the end of the day.
That's a sweet trade. No, I'm with you. You stay right there, folks. Darrell Martin, Tom O'Brien, appreciate you growling, prowling with us. We're going to coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. I appreciate you growling and prowling with us out here. Right now, you get the Dow down 86. NASDAQ is off 7. S&Ps are down 7.75. And you're going to see this baby, folks. Okay, it's just ready to go. It's going to be interesting watching this baby shake out. So check it out. So if I put the 10-minute back up, you're going to see that it built the cause. And what we have right now, let me see. I'm into it. Now, you get a picture of this, folks. I've been doing this for so long. It's pretty sick. But we're into it by 4 minutes. We've done 3,400 contracts, and that's plenty. The reason being, folks, is that we only, let me get, we've done 2,300 versus 3,400, last 10-minute bar. This is going to go spike, man. This is going to go spike this 1686, man. Oh, it's a beautiful thing. I'm telling you, folks, this Nadex product is a sick product. And all you have to, just like anything else, you got to have patience, man. And I don't know if Congress started talking yet, man, but this bar, let me see here. So I'm at 5. Yeah, I'm going to be good. I'm at 5 minutes, man. And what you have here, folks, is that at the 1686 mark, there's nothing to stop this thing just to bounce right up to the 1687. So it's going to be interesting watching this whole thing shake out today. The volatility's there. The bottom line is that you get the makings of a nice trading day out here, folks.
Yeah, I went ahead and put on for my gap fill, and I don't know if I'm going to hold it all the way through the end of the gap.
Yes.
But I went ahead and put them on, and I put on 10 contracts on the S&P binaries, 1692.5 at 415.
Okay, tell me the number again. What was the number?
All right, so the 1692.5
Nice.
was the strike.
Yep.
Which is yesterday's settlement price.
Oh, cool, man. Okay.
And so I targeted the settlement price of 415.
Yep.
And the cost was $10.50.
Wow.
Per contract.
Okay.
Put on 10 contracts, nothing like $100.
Yep.
And so we're already on. Like, we were doing this while we were talking. I was putting this on, and in the break there, so it's up like $60 right now. I'm already up 65% on my trade. And I will also put on the Dow, the 15,250.
Yes.
So 415 expiration. I did 10 contracts for 1150. And the settlement price for the Dow yesterday was 15,261. So this is even closer than the settlement over on the Dow. And it's already up to 20. So, or we're up $20 right now. So we're up about, we're up about 15-20% on that trade at the moment. But they fluctuate. You get some nice returns on these binaries if you trade them in the right direction in the morning, and because you'll get them really cheap. So they'll start really getting more and more valuable as that volume starts pushing it closer to settlement.
Yeah,
and
I'm going to wrap my head around this.
I've been doing it like crazy.
Yeah, no, I'm definitely going to wrap my head around this. So watch this, folks. Okay, this is dramatic. When Darrell, I'm just going to stay with the S&Ps because I'm in them right now and I don't want to look at anything else. But what's happening? That 1050 he put up, just so you understand something, right? If in fact it gets on the other side of that 1692, which it very well could, you're only talking shot money here, okay?
Right. I'm not even going all that far, but yeah.
No, the take on his side, folks, okay, is $89.50 per $10.50. Just so you understand how that goes. Yeah, that's.
I mean, it's only about an 800-900% return.
No, I know, man. Listen, there's no doubt. And so watch what also happens here, folks, is that we're talking about a spike. So if he gets the spike, he can just sell 5 of those. He can have something in there, sell 5 of those, he got all his money back. He wouldn't have to sell 5 of them. He could sell 3 of them, okay? So you don't have to wait to the very end also. What he's done is given himself 415, and 415 is unbelievable when it's only 1032 right now, folks, okay? That's kind of interesting. That's really interesting, man.
And see, I went ahead and also put in my sell limit contracts.
Totally.
So what I did is I set it to sell out at 43.
Yep.
And
Nice.
basically my logic on that, the way I work it is, I know that this binary,
yes,
the 1692.5, will be worth, as far as technical, price model,
yes,
will be worth $50.
Okay.
When the S&P is at 1692.5.
Right.
That will be the because there's basically a price of a binary is like sort of like a probability model.
Yes.
So there is a 50-50 probability it'll expire there at expiration.
Okay.
Okay? Now, there's a higher probability it may actually get there, but there's a 50-50 probability it'll expire there. So if there's a 50-50 probability it'll expire there, then it's going to be worth $50. Then you got to, take off a few bucks on each side, maybe for that spread. So that's going to put you, like, say, 47 if you're, selling out, or 53 if you're buying back. Okay?
Wow.
If you were shorting first. Then I go, what if it doesn't hit 1692.5? What if it hits 1691.5?
Yeah.
And turns around. We saw this yesterday. It got within like 3 or 4 ticks and then just popped right back the other way. And so what I've learned, what I do is I actually use what I call the 43-57 rule.
Okay.
Which is where I get out at 43. Like if I'm buying and out of the money and I'm going to get out like on this, I get out at, say, $43 is my target price. And that way, not only do I have the bid-ask spread, but I have a little bit of room just in case it didn't quite get to it. And I risked 1050. We're still talking a 300% return on my trade.
Man, it's
if it gets there.
It is absolutely
so
where
instead
it's
of being
at.
greedy.
Yeah, no,
Yeah,
totally,
so instead of being
man.
greedy and waiting, and that's the biggest mistake people make on these trades. They'll go in, they'll get all greedy.
Yep.
And it's like, we're talking 300% return. Tell me any stock trader that would not be ecstatic to be able to go in and buy a stock for $10 and sell it for $30 and do that multiple times a day, every day of the week.
Exactly. No, there's no doubt. And
people go, but I want my $80. And
yeah.
It's like, really?
Well, it's so cool. Inside the context of what you just taught us there, right? What is so cool, which is important for you to understand, folks, is that we're in the probability business. And when Darrell was saying, well, guess what? When it gets to that strike, folks, it's still only a 50-50 deal. And it's only going to be worth 50. So with his analyzer, and the analyzer is going to tell you that, by the way, folks, okay? So what ends up happening is that understanding that, you're not going to basically turn around and say, oh, I think I can get more. You're not going to get more, folks, okay? That's what it is. It's a number. That's what it is. But guess what? You pay $10.50. You can get 30. Darrell wants 43. You can get 43, 42, 41. The bottom line is that if you have it in there, what you will see is this. any type of spike, all the orders will disappear, folks. And they disappear so fast, it's amazing. Isn't it, Darrell? Meaning, if you have the order out there, folks, you get the money. I mean, because everyone is covering.
It's first in, first fill.
Yeah. Oh, it's intense, man. When the spikes come in, folks, all of a sudden your screen light up, and that's it. It's like all the orders are done. And guess what? It can come right back and on the other side, but you already made the money, and that's all that really matters. So it matters.
Exactly. So
yeah.
Have those take profit orders and have that exit plan in, you know. And, and we even do that on the spread. You can manage it right from the scanner. It's built in. So you just have a little button. You click right here, and it's like close it. Open it up. I'll put it the price higher, and we're set.
Right.
Now, down here, another cool feature. We talked about this. You can go to the simulate section.
Yes.
Most people don't even notice this little plus sign right there. Type in 1692.5.
Okay.
Because that's what we're targeting, right?
Yes.
And we're basically targeting that strike because that was yesterday's settlement. And it'll tell me what that binary will be worth when it hits it. And notice what it says, $50 and 50 cents.
Look at that, man.
So it's calculating it live. If I change it, I mean, it'll do its thing and update and all that. See, now it says 61 if I put 1694.5.
Right.
So that lets me know, hey, you know what? I'm right on track with that 50. I'm probably being a little bit conservative by using the number 50, or 43. But I'd rather give up with the $7 or $8 and capture a 300% return.
You're in at the right price. And that's where the key comes, folks, also, is that just having patience and getting it at the right price. Because let me tell you something, okay? You can buy anything. Buy it, and that's just not in the market, folks. That's anything. You can always buy something. Guess what? You want to make money, you got to sell it. Selling is a different ballgame, okay? It's like, who are you going to sell it to? Okay, always remember that. I don't care if you're buying a stock, you're buying a car, you're buying real estate, you're buying anything. If you're in at the right price and you can sell under everyone else, or you have a better piece, or whatever that is, guess what? You're the first one out, and you're doing it all over again. It's crucial to really understand in the trading business, period. And I'm expanding that trading business to any type of business that you are trading something with competition, folks, okay? It makes a huge difference. If you got the monopoly, that's a different ballgame. But if you have competition on the other side, well, guess what? Make sure that you're buying right, because if you're buying right, you're going to be selling right, unless you, unless you're greedy. But bottom line,
don't know your exit plan till you know your entry plan, and take the entry that you want. Don't take one just because you're trying to chase it.
No doubt.
And one thing to point out too, I always had that plan. I have my exit plan.
Yes.
In this case, I don't have to worry about a stop loss, but I have my take profit plan, and so I put it in there immediately after I get filled. But at the same time, that doesn't mean I'm locked into that. That is what I expect to happen.
That's right.
But I'm going to watch, and let's say we get up, to like 16, 87, 88. And I see this thing that's starting to falter. I see things starting to turn around. The BMI is going. I got market volume bid noise on the market volume starting to head south.
Sure.
I can take my profit. I'll probably be up about 100% by the time it gets to 1697 or 1687.
Well,
so I don't have to wait all the way. And
that's right.
It's so obvious, but so many people, and I just talk to traders, and they put them on and they either hold them to expiration. They put them on and they set one price and they walk away. And there's nothing wrong with that. You can put it on and at least set a take profit.
Sure.
But, it's okay to change that plan if the chart tells you otherwise. Don't be staring at your P&L, because that'll make you give up money all the time. But if the chart says, hey, this thing's starting to turn around, or you see something pop across on the news, or, whatever, that's something to definitely take into consideration.
And what happens here too, folks, okay, this is pretty cool. So watch this. We're talking about, the trade set up right. He's in at the right price. It's a Friday afternoon. You're going to be looking at the market. And then guess what? His daughter might be coming home from school and say, hey, Dad, bottom line, let's go for a hike. And you know what? He's going to say, bye, bang, hit the button, take the bread, and take off, man. And the reason I'm bringing that up, folks, that's crucial also to understand on Fridays, okay? Because when we're always in this business, let me tell you something. You're in this business to go do something else, okay?
Yep.
And keep that in mind, okay? You're in the business to take money out of the marketplace, okay?
And out of your account.
Yeah, exactly. No, exactly, man.
So, you know what I'm talking about. You go in there, you make it, and so many guys leave it, and it's like, walk away, pull that money out, and go buy something. Go take your daughter to the mall and buy her a new dress. Go buy a car. Go buy a boat. Go buy something with it. But you got to have it. I mean, you're doing this to go buy stuff with it, pay off debts or whatever. But I mean, man, it's amazing. I'll see guys come in with a couple $1,000s, grow to like 20 or 30 grand.
Yeah.
Okay, and then they lose it all.
Listen, man.
It's like, oh my gosh, you didn't even make a withdrawal. Come on,
Every time someone's in my office, I had someone in my office yesterday, right? And they're talking about investing, and and I says, listen, I am the wrong person to talk to. I says, I'm always taking money out of the marketplace. I says, and I understand you're a long-term investor. I says, okay, but I am the wrong person to talk to. I says, because, my take on that in general is that, well, there's a lot of other places that, I mean, if a couple stocks upside down, that's one thing, but you get the gist of it. My take, folks, is that on a longer-term basis, when I look at the S&P and I look at the rest of this, to me, it doesn't fly. The trading aspect flies because you can get in and get out. And I can tell you, just even from the gold, when you look at the gold stocks, they're beautiful right now. But yesterday I heard Frank Holmes on CNBC saying, "Oh, this is just great." I'm saying, Frank Holmes, go pull up a couple of his funds, folks. Okay, I mean, forget it, man. I mean, he's been saying that this has been great for 10 years. It's like, oh, really? He's still
2008. This is great.
Yeah, exactly. Okay, never sell.
Everything's
okay,
on sale.
We turn around. If you pull up Gold Corp, okay, which is a great company, by the way, folks. There's no doubt about that. But guess what? I can bring Gold Corp back to 2006, and it's the exact same price. Oh, really? So you bought it in 2006. You didn't sell it, and guess what? What is it? 2013. The key, even to me, the key in a long-term, even investor, is that you can hold something over a year, no doubt about that. But you got to take it and then swap it out, because nothing. If I've learned anything, nothing stays up forever and nothing stays down forever. So you make the run. Take your bread, go to the next one. And there's plenty of people that do understand companies. And a company that is basically, going forward, understanding it, I think, there's good scores to be made there. But that is not, it's not unusual, but I bet that's 10, 15% of the marketplace that, that can be had. But you still got to take your money. Because if you don't take your money, the market's going to take it back. I mean, the market, I haven't said this in a long time, is the most efficient mechanism to take the most amount of money away from the most amount of people in the least amount of time. There's no, it just is. It's like it's like a machine. Amazing.
All right, so speaking about the most amount of money.
Yes.
I talked about this on my show yesterday. The New York Fed, the Fed, they have the, obviously we have QE, we have the $45 billion going on every month,
85,
right?
Right.
Well, we have 40 for mortgage back and then 45 for the treasuries.
Yes.
Well, they also have authority to do the temporary open market operations.
Right.
Okay. They have done over $40 billion this week, which is more than they've done all year on temporary market operations. It is insane. You go in, and I pulled up all these stats. I posted them over in the den yesterday.
Okay.
And it's just an insane pump that's happening right at the same time as all this Congress stuff is happening. I want to get your take on that. I don't know if you've checked it out, because it's one of those things a lot of people haven't even looked at. But it's real. I mean, it's an insane amount. I mean, we're talking, they basically doubled their treasury purchases. They're doing the repos. I think it's to mess with the interest rates.
Yeah, it is. You stay right there. Darrell Martin, Tom O'Brien. We're going to be talking about that as soon as we come back, folks. Dow's down 75, Nasdaq's up 3.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. We get the Dow right now down 83. Nasdaq's off 7. S&Ps are off 850. What we have up on the screen here, if you happen to be in your car, folks, is Darrell just put up this week, $40.1 billion is getting injected into the economy. And, of course, what more than likely is happening is that, bottom line is that you get enough volatility out here with Congress that the Fed is priming the pump and keeping the pump primed because of the fights that are taking place in Washington, D.C. Now, what does happen is that as that money comes in, it comes in repos, folks, okay? So that the Fed takes money, puts money in the market, takes money out of the market through the repo market, does it? It hasn't. The thing that's amazing about the pumping in of money that we have seen in the last 5 years, it still hasn't lit inflation up. This here, Darrell and folks, this is, I mean, it's short term. Is it going to make a difference?
Yeah.
Well, it's going to make a difference in the aspect that there's plenty of money in the system, so that if you or I are going into banks or going into anyone else, I mean, you know, there's extra cash. That's what it really comes down to. I mean, is it going to make a difference in inflation? I don't think so. You know, because what's happened on a continual basis here, folks. The reason, if all of us, okay, so picture this, if all of us were using all our cash, it would make a huge difference in inflation. But what has continued to happen is that the majority is still fearful because of the downdraft, so the velocity of cash is not going through the system, you know?
Right. Oh, I don't have like an inflation fear on it, but I just found it, I mean, literally how many they've done this week is more than they've done all year long.
Right.
Right as this Congress thing, of course, pops up. But also I saw an article where they're actually talking about starting to mess with the repo market as a way to artificially start inflating interest.
Well, what they have to do is this: that, you know, when the Fed puts that in there, just so you can understand how this works, folks. Okay, and this is the thing that's deviant, and this is the thing where people can get absolutely upset. It's that it's a top-down deal. So the closer you are to the bank at the top, and the closer you are to having a lot of money, the more money that you make. There's no two ways about it. And that's why the middle class is getting killed, okay? And that's why the poor get poorer, because what ends up happening with free money, the only people that get free money are the banks first, and then good credit. And then, I mean, you know, depending where you are in the country right now, and depending what your relationship is with banks, they will, you know, I know in Florida, they're giving out free money if you have good credit on home equity loans. Free. It's free, folks. They just want you, they're trying to push it out to keep your business. Okay? So it's pretty sick, because what ends up happening is that there's not free money. You know, there's no such thing. Okay? They are doing that at certain banks because they want to keep the rest of the accounts going, and they want to keep you in there. And the competition's getting intense right now because there's so much money sitting at banks, you know. But this amount of money that we're talking right now, the $40 billion, that has to do with cash flows at large banks, because what ends up happening is that what we saw in 2007 or 8, Darrell, is that the liquidity, you know. And they got to make sure that liquidity's there, that it flows through. Listen, folks.
Yeah, I mean, more than 2 years of, like, repos happening in, like, 1 week. Just pretty amazing. Yeah.
I know. Yeah, listen, man, it says something. I'm glad you picked it up. You stay right there, folks. Get our man, Mr. Basil Chapman, coming up next. Nico and Paige, and Darrell's going to be right back at you. Have a great one, Darrell. Have a safe one, man.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, and long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position. Subscribers sold recently for plus 42% on parts and plus 64% on rest. Had Hertz Global as a core position for 6 months. A current position entered as a turnaround company is trading over 100% of its entry point as a portion sold earlier for a plus 21% gain. Subscribers to the Opening Call see the Chapman Wave techniques demonstrated and explained daily to also educate investors. Now you can get a free 2-week trial. Basil Chapman's newsletter, The Opening Call. Just visit the front page of TFNN.com.